Hey y'all, welcome back. In the last video, I talked about taxes, retirement savings, and life insurance. And I mentioned that there are three buckets we need to consider when we're thinking about our retirement savings and taxes. The first bucket is the taxable bucket. Second bucket is the tax deferred bucket. Third bucket is the tax-free bucket. In this video, I'll cover the taxable bucket. So in the taxable bucket, we want to have no more than emergency savings. And for many people, the advice we've been given by financial planners and wealth advisors is to have no more than 6 months of your monthly expenses saved up for an emergency fund. And the reason why it's not a good idea to have more than this amount saved up when it comes to retirement savings is when you're in your retirement, the money that you save in this bucket tends to be in products such as CDs, mutual funds, stocks, things that are easily accessible or known to be liquid when it comes to your need for cash. That's why it's called an emergency fund. And the taxes for these types of products tends to be high, and they are taxable. So in retirement, no matter what amount you have saved in this bucket, you are going to pay taxes on it. And you can think of it this way. Let's say you are fortunate to be able to save 6 months of savings, and for argument's sake, you need $15,000 per month for your monthly expenses. That means you have $90,000 saved in this bucket. Well, depending on how long you have it saved and how much it's grown, you will pay taxes on the capital gains. So the difference between what you invested or saved initially and what those instruments, whether CDs, mutual funds, or stocks and bonds are worth when you need it in retirement, will be taxed. So that difference will be taxed, and you have capital gains taxes. So it's true that you could have long-term capital gains, as I previously discussed, which tends to be on the lower end. But it's also possible that the amount itself that you have could be so large that the amount that you pay in taxes is large. So you're well advised to make sure that you don't have more than the emergency fund amount saved in the taxable bucket. All right, y'all, I hope this tip has been useful. So smash that thumbs up and subscribe to the channel. Also drop me a line and let me know if this tip is useful. And if you plan to use this tip, here's my disclaimer. If you plan to use this tip, please consult with a qualified tax professional, as your situation is unique and you want to make sure you get the best advice for you. I share this tip based on my experience and my knowledge and education. So please consult before you use it. All right, y'all. See you soon.